into the red. But let's invite a mid-cap IT company, that's Sonata Software. The company has reported a good set of earnings. In fact, this stock has been on quite a roll, 20% up in 2018, 100% plus up in the last 1 year. The numbers are looking good. Their revenue growth was driven by the domestic products business, while the margin beat came in from the international business. Prasanna Oke, the CFO of the company, joins in now. Good afternoon, and thanks so much for joining in, Prasanna. Let me first start with your international IT services business. Your revenue growth was about a little more than 1%, so slightly shy of your own guidance of 2 to 3% on a quarter-on-quarter basis. But if I look at it on a year-on-year basis, it's about a 15.5% growth. Give us a sense of how the trajectory is looking for the full year.
Yeah, thank you, Rima. Actually, just to clarify our dollar growth, while it shows as 1%, we were impacted by cross-currency on account of the GBP. Our growth in terms of a constant currency has been about 3% for this quarter, and in line with our expectations. So we think it's good performance, and I think the year-on-year growth has been about 22% for this year. So on the international business, as we go ahead with our focus on platformation and digital transformation for our clients through this medium, and platformation is one of our proprietary technologies that we're using. We are seeing this message getting across to our clients. We are engaging in a number of discussions, which will lead to sustained and continued growth. And so we believe that with the strategy that we have put into place, I think our growth on a constant currency basis of 3% for this quarter will sustain, Rima.
Okay, all right. And for the year, what kind of a number we can work at for international business and domestic business? If you can split that up for us.
Yeah, so Nigel, very quickly, our international business last year we had grown by about 18% in dollar terms for the full year. So while we don't give a guidance as such, but we believe that we've got the right momentum, we've got the right conversations going on with our clients, and we will see in the next 2-3 quarters. We don't expect any adverse surprises. So, to that extent, I would say that we would like to keep up this momentum and trajectory. On the domestic part of the business, it's grown by about roughly, we measure this domestic business in terms of margins. It has grown by about 7% on the PAT in this quarter on a sequential quarter basis. So we are getting our message of platformation into the domestic services also. We are engaging with clients on the entire strategy, adding value-added services. So we expect that while we may not look at revenues in terms of growth, but our margins and absolute margins more specifically will continue to show up trend. Again, on this segment also, while conversations are going on, but we believe that clients are finding far more value, and that's the reason you're seeing the kind of a sequential PAT growth on the domestic business also.
Okay, so since you're saying the correct way to measure the domestic products business is by the absolute EBITDA. In Q1, it was about 16.7 crore. What should be the expected growth from here on? Give us some idea of the run rate or improvement that we should expect.
Yeah, thanks, Rima. In fact, I think we expect the industry to be growing at about 10% on the domestic side. We believe that we will be bettering that. Our growth on a sequential quarter basis in terms of EBITDA has been 6%. Our intent of the organization will be continue to kind of maintain that kind of run rate growth. That's the plan. That's where we are focusing on, and then obviously if we get more traction with our value-added services, we would hope that it carries on in the same momentum. So a lot of efforts being put on to engage with more clients, more value-added services. It's not just the license margins which are lower, but in terms of taking them to the cloud, to the Azure cloud, to doing the license management, to working with them on the security aspects of it, to give them an over-encompassing view and validated services to actually transform the the domestic clients also. So all those initiatives are working for us, and we believe that, as I said, the growth should sustain and continue.
Prasanna, as you speak, it seems the street likes what you're saying. The stock has moved to the high point of the day. So let's get into some more details coming in from you. If I look at your market capitalization, it's roughly around 3,500 crores or thereabouts. What is the cash that you have in the books currently, and how do you intend to use it? Is it a possibility you buy back some shares, give a dividend, or do you want to do some inorganic growth?
Right, a good question. So very quickly, our cash at this point of time, net of any debt, etc., is about 489 crores, roughly about 15-16% of our market cap. But I think more importantly, we have been returning cash back to our shareholders. We had the AGM a couple of days back. They approved a 6.5